Hey guys, this is Rudy for Investor Investor coming at you from Palm Beach County. It is Friday. It is June the 11th. I am in Palm Beach County. I am in Palm Beach. I will not be in Palm Beach for very much longer. I will be hitting the road today and going to the other side of the Florida Peninsula to a city called Fort Myers. And that's in Lee County, and I'm going to be there for the rest of the weekend. So I figured it's been it's been busy. I haven't had a chance to make too many videos, and I thought I would just check in with you guys and give you some entertainment for the weekend. So if you spend a few minutes with me over the next weekend, I'll be back again next week. So what I thought to do is just go into some of the news sites and kind of just see what's going on here in the oil marketplace today. So let me just get myself sort of off the screen again as I usually do. So first thing I did today was obviously, as I usually do, certainly I only do this about 15, 16 times per day, is check my my stock portfolio to see what's going on. And one of the longs, energy longs that I have is Total, the French-based super major energy company, and its ticker symbol is TOT, TOT, for Total Energies. Or is it? Because I went into my TD Ameritrade account and called up TOT for Total, and it says the symbol you entered, TOT, has changed to TTE. I don't recall them asking me if they're allowed to change their ticker symbol, if they can just do whatever they want. As it is, I look at my investment portfolio and say, like, yesterday I owned TOT and today I own TTE. What do you think you're doing? Anyway, it's quite a shock when you see like one of the long positions that you had in your account for a few years is suddenly no longer there and it's being replaced by something else. But anyway, no big deal. I just thought I'd share that with you because it's quite interesting. It's not every day you see a super major changing its ticker symbol from one three-letter acronym to another. What is actually going on with TTE, so Total? So let's go across here and we look at this. The target price on this oil super major suggests 45% gains are coming, and here's why. Oil majors may not be the most obvious choice for renewable energy-focused investment, but that may be changing. Well, that sentence in itself is a sentence that will probably be changing as we go along, but there can be no doubt and no question in anyone's mind, especially if you're an energy investor, that the green lobby, tree hugging people have been targeting the energy and fossil fuel industry as we affectionately know it for reasons that are not necessarily aligned, but they are certainly making an impact. On Wednesday, the chief executive officer of Royal Dutch Shell announced that the group would accelerate its plan to cut greenhouse gas emissions just 2 weeks after a Dutch court found the oil major partially responsible for climate change. Isn't that interesting, right? We can now litigate who is responsible for climate change and who not. So we litigate against the oil major, but we do not litigate against the people utilizing the products manufactured by the oil major to run their trucks and cars and trains and planes and charge their mobile phones and all that kind of stuff. They are not responsible. They're just users. It's the producer that is responsible. Kind of like that old American argument about, guns don't kill people. People with guns kill people. It's an interesting sort of dichotomy where you say, who is actually responsible? In this case, the driller of the product or the user of the product. Anyway, they said that Royal Dutch Shell is partially responsible for climate change. Go figure, huh? Meanwhile, BP is building out offshore wind energy in the United Kingdom, and both ExxonMobil and Chevron face intense pressure from shareholders to pivot towards a low carbon future. And right now, French oil major Total is an attractive bet for investors looking to capitalize on the shift towards renewable energy, says MKM Partners. MKM initiated coverage of Total on Wednesday, giving the stock a buy rating and a target price of $70. Let me just go back to the previous screen for a minute. It's currently trading at $50. So if you like the uptick of an old fossil fuel super major sitting in your long portfolio, which by the way pays a very nice dividend too, then you can certainly look at Total and you can say, hey, your MKM, assuming they'll be right, has actually said that you can buy Total, which remember is now TTE, and it pays a very healthy dividend. You can keep it as long as one of my foundational stocks in my investment portfolio, and they say this is going to go up to $70 per share. So we'll see. We don't know if they're going to get it right, but obviously, like with many of the energy companies, there's certainly a possibility for a nice uptick. So what else is in the news? Goldman Sachs. Usually with Goldman Sachs, whatever they say, I want to take the other side of the bet. But in this particular instance, I'm going to cut them a little bit of slack here. So as you know, if you've been following my channel, I sometimes joke, but it's not a joke, that investment banks like Goldman Sachs and Morgan Stanley, for example, are some of the largest oil companies on the planet. So when you think the largest oil companies on the planet include names like Chevron and Exxon and Total and Royal Dutch Shell and BP, I'm not going to suggest that you're absolutely wrong, but you need to be aware of the fact that some of the largest energy majors, super majors, are actually investment banks like Goldman Sachs. The thing with market makers like Goldman Sachs is that they have the ability to take both sides of the trade. So effectively, they put themselves in a position where they very seldom really take a hit because as the market maker, being on both sides of the trade, it's sort of a win-win situation, generally speaking. Anyway, Goldman Sachs said it first expected Brent. It first said it expected Brent to hit $80 this year in March, and it's now expecting. They said that in March, expecting Brent to hit $80 by the third quarter of this year. That is very possible. The third quarter is just a couple of weeks away, and we see Brent already edging up into the mid-70s. The lifting of US sanctions on Iran is unanimously seen as bearish for oil prices, but observers differ in their opinion on exactly how bearish it would be. Make no mistake, Iran is a major oil producing country, and if there's more production coming out of Iran and the sanctions are lifted, there is going to be more supply, and that will impact the price for sure. How much? Probably, so I'm one of those observers who probably differs in my opinion in terms of exactly how bearish it would be. And the reason for that is primarily that as this initial production and supplies come on board as a result of lifting of sanctions, we're also seeing a huge uptick in demand as the economies globally return to normal, sort of as the pandemic subsides in time, as we see the changes happening. At the time of writing, which was today, June the 11th, Brent was trading above $72 a barrel, and West Texas Intermediate, WTI, was changing hands at $70.72 per barrel. It wasn't quite that right now when I looked just a few minutes ago. It's around $70, but $70 is ka-ching, for organizations like Occidental, who told us in the last conference call, the earnings call, that their break-even is $35. As I said before, you don't have to be a rocket scientist to know that $35 is half of 70, and they are currently producing more than 1 million barrels per day at around $70 per barrel. What else is going on? Occidental said on Thursday, this was yesterday, June the 10th, that they would be selling some of their acreage in the Texas Permian Basin to a private equity-backed company called Colgate. I always thought Colgate was toothpaste, but anyway, Colgate Energy Partners 1113 LLC for $508 million. It's not a huge chunk in terms of an asset sale, but $500 million between friends is probably still something we can chalk up as a neat little amount that you can use for repaying debt. The company's long-term net debt stood at $35.5 billion as of March 31, according to the last quarter's filing, and it said that it plans to sell between $2 and $3 billion in properties this year to reduce its debt. Now, in the previous quarter's conference call, we learned that they had sold assets of about 275, was it, million or something? So this adds another 500 million. So we'll see how we go. Anyway, the divestiture target for 2021 is between $2 and $3 billion. They're very confident in making that statement, which means that they probably have a couple of deals in their back pocket. The production that they sold is not huge. It says the deal with Colgate Energy includes about 25,000 net acres in the southern Delaware Basin in Texas, with current production of around 10,000 barrels of oil equivalent per day from about 360 active wells. Anyway, some news from Occidental. What else have I got here? Yahoo Finance reports this is, I think, via Reuters, if I remember correctly. Let me just quickly see who posted this. Zacks. Ew, Zacks. There's a mainstream media financial reporting company you can avoid. But anyway, this one, interesting here. The renewed confidence can be gauged from the fact that the Zacks energy oil sector has gained 30% so far this year, outperforming the S&P 500's 13.3 appreciation. In fact, some of the major gainers of the S&P 500 this year include energy-related names like Marathon Oil, Devon Energy, Diamondback Energy, Schlumberger, and Occidental Petroleum. Marathon, carrying a Zacks rank of 3 hold, is the top performing energy stock with a gain of 100%. Doubled your money this year. Huh? Nice job for the people who are long in Marathon. Very, very good. Followed by Devon, almost 100%, Diamondback, 82%, EOG, 72%, Hess at 68%, Schlumberger at 63%, and Occidental at 64%. Come on, Occidental, stop being the laggard and give us some gains on the stock price, right? I think we're ready to see a little uptick and see Occidental move from $28, where it currently feels like it's stuck, but actually in real terms, you have to look at these over a few months, 3 months, 6 months, whatever. That graph looks pretty good. So even though Occidental kind of feels stuck at $28, who knows? Maybe by the end of this quarter, which is just 2 weeks away, we're in the 30s, early 30s, and then we'll see how we go. As we lead up to them reporting their second quarter results, which is going to be in about 15 years from now. So where are we now? So it's mid-June. The quarter will end at the end of June, the second quarter, and we'll have to wait all of July and midway through August before Occidental actually tells us what happened during the quarter, when WTI, which constitutes the bulk of their production and revenue, hovered around $63, $65 a barrel on average for the entire quarter, with their break even way below 30. So guys, that is it for today. It's all positive. It's all good news. If you're an energy investor, you're having a good time. As most of you who've been following my channel know, I have a number of super majors in my long portfolio, and these include Pembina Pipelines, it includes Enbridge, it includes Total with its new ticker symbol TTE, it includes Occidental Petroleum, it includes Energy Transfer. Boy, has Energy Transfer been kind to us over the past few months. And then I have a whole plethora of small little speculative stocks, mostly in the sort of clean energy, especially uranium segment of the energy market. So guys, that's it from Rudy for the weekend of July the 11th. I'll be in Fort Myers, and I'll be back on Monday, and I'll see if there's anything exciting that's happening over the weekend that I can share with you when I get back. Take care, enjoy your weekend, stay safe, stay away from COVID, celebrate the end of the pandemic with me, and I'll talk to you guys soon. Bye-bye.